Hey, what's up? I wanted to talk to you guys today a little bit about my journey of becoming a limited partner in real estate syndication deals. It actually started in November of 2016. I bought my first home, and my wife bought her first home at the same time as well. And the kind of thought and thesis was, hey, whenever we get married, let's turn your house into a rental. The rates are low right now. The home values are, still affordable in our area, and we thought that would be smart. So, we did exactly that. And at that time, I wasn't really aware of real estate syndications. All I knew was renting rentals, and I had a buddy who basically had four rentals, and he was like, I'm buying one rental a year, single family, and he was like, I try to get them to where they cash flow $1,000 monthly, and his goal was to have 10 of them in 10 years and making 100 grand. And I was like, sounds like a pretty awesome game plan. And that influenced me to learn about real estate. So upon me and my wife getting our home, I started listening to Bigger Pockets, which is a great podcast, educational podcast for real estate investors and online community. And one of the things I learned over probably the first year, upon us owning those homes, was most investors, after they had built, a large portfolio of either single family homes, or they were fixing and flipping duplexes, or going through the BRRRR strategy where you buy, rehab the home, refinance, rent it, and then repeat and buy a new asset. They all said they wish they had learned about passive investing and doing commercial real estate syndications. So that kind of caught my eye and or ear. And one of the things that I had learned, like around that same time, I was working for a drone pilot who did real estate drone recording. His name was Jonathan, the drone guy. He's still in business in LA. But I just said to him, I was like, "You are not flying drones for a living. I know you're not making, a bunch of money to afford living in LA doing that." And he was like, "Yeah, it's my passion project. What I'm really doing is real estate syndications." And he basically told me how instead of buying, simple example, buying a home or an apartment, excuse me, for $100,000, we buy 100 plus of them, and maybe they're $50,000, $60,000 a piece, whatever it may be. So that immediately clicked. You're buying in bulk and you're getting volume at a lower cost, so you can create efficiencies and earn money. And I was like, oh wow, that's interesting. So at that time, I'm learning on Bigger Pockets and whatnot, and then probably 6 months to a year later, I got a client who managed real estate deals and syndications. And I did the marketing for them, Google Ads, doing the SEO, working on reviews, drip campaigns to nurture customers, and just advertising to help them fill and reduce vacancy. And, over that relationship, we were able to get their vacancy to 98, 99, 100%, and did really well. And I got to ask them questions and learn all about syndications there too. And through those experiences, it just taught me a lot, without having to go through like a 8 to 10 year, 5 to 10 year, whatever investment single family portfolio. It taught me very quickly that commercial real estate and passive investing is actually the way to go. And there's a lot of special things that are included in commercial multifamily that I'll include in the blog and in the description of the video. But just real quick firing those off. There's tax incentives, which is incredible. You can depreciate a property year one versus across 27 plus years on a single family home or a residential property. So you have paper losses, which is great. There's also a resiliency in the commercial multifamily market. So residential homes, they operate off comps. Like if you've ever bought a home, you know that in when you're working with a real estate agent, they'll say, hey, these 3 or 4 comps, the homes in the area have sold at this price in the last 3 months or 2 weeks. And with commercial multifamily, it does not work that way. How it actually works is it operates off a net operating income. So a lot of syndicators, they'll try to buy a distressed asset, maybe that has like 70, 80% occupancy, or rents have not been raised in years, or maybe there's ability to add value to an apartment where, let's say it's worth 100 grand, but you invest 30 grand to fix it up. Now that $100,000 proper apartment is worth, let's say, 160K. So you're in for 130K. Now it's worth 160K. You've added 30,000 of value. And if you do that for every door, it adds up. That's what makes the net operating income, is you're adding value, and now the monthly cash flow and just the money the business earns is more. So a lot of these things actually make it, just a great hedge and a good tool to be a part of your portfolio versus, equities, which often can be correlated, or even volatility of cryptocurrency, which I love. I'm a Bitcoiner. But beyond that, the most important thing I think is time. You get back time to do what you want. So by investing in commercial multifamily, you also are passive. You don't have to deal with the headache of dealing with tenants, fixing things, working with property managers who a lot of times are just very lazy. You're just another number to them. They only collect a flat fee on every home. So this the classic, the squeaky wheel gets the oil. So if you're beating them up and you're actually having to just follow up with them constantly, they're going to give you more attention than the people who just sit back and do nothing. And sometimes you have to do that to make sure your property does not get neglected. And our property did. My wife's home got neglected, and we had some repairs that were just a little expensive, not fun. Luckily, insurance covered a good bit of it, but it was a headache. We had to be a part of it. It wasn't fun. So I'm really grateful and thankful that I learned about commercial multifamily and the ability to invest in those deals. I could go into a lot more detail about how that works, but I'll save that for another time. I just wanted to share, that's the process I went through learning from me and my wife buying our first home to like having the goal of getting one home a year. But then through bigger pockets and my experience at work doing marketing for sponsors and real estate syndicators, I quickly learned being passive is the way to go. So I did that, and it's been great since, and I will continue to do it alongside dollar cost averaging and buying Bitcoin, because I believe that the perfect portfolio in my mind is having cash flowing assets in real estate as well as holding Bitcoin, which is hard money that can't be messed with, that cannot be debased, that is the future currency of the world and the internet. So I hope this was helpful. This is my story of becoming a limited partner in syndication deals, and I'd love to connect. If you have anything you'd like to share, please reach out, and we'll talk soon. Thanks. Bye.